Tesla stock just tanked 50% in 2025, one of the worst start of the year ever for Tesla. Headlines are screaming, sales in Europe crashed 45% in January, in Germany they are down 70 to 80%, where locals are propping up brands like BMW, Volkswagen and Mercedes. And what about China? Well, Chinese shipments are also down roughly 49%, where companies like BYD and Xiaomi are crushing it in a brutal price war that seems to be getting tougher and go on forever, year in, year out. The US, you think? Well, they are roughly 10% worse off than the start of 2024, even worse off in specifically California. Quarterly sales estimates are brutal, now just around 3 to 400,000 units, a steep fall from last year's very strong end in Q4 at 495,000 cars, just below half a million. That is obviously gonna be very brutal for the earnings per share. It could dip roughly 60%, some analysts says, and while Tesla's PE ratio still sits at a lofty well above 100 times PE ratio, which in itself is actually quite a lot above its 5-year average. If EPS, earnings per share, tanks further, the valuation could be even in further trouble. We have protest, vandalism and Elon Musk politics that are torching Tesla's vibe, I would say. But some still see a doubling happening actually if you look at the tip ranks, the current price target is around $324. So should you hold or dump the stock before it's too late? We mentioned the sales in Europe tanking, facing challenges both in the home market in US but as well in Canada and China. Interesting enough, we can see that global EV sales are up 50% in February of 2025. According to Motion, the leading EV research house, today's revealed that the number of electric vehicles sold globally in February of 2025 is 1.2 million. The EV market grew by almost 50% compared to February last year, but fell 3% compared to January of this year. So how can Tesla's sales tank so much despite the global EV sales being up 50%? We can see on other headlines here that according to Electric, we can see that Tesla sales again crash in Europe by 70%. Not good headlines here as well, where we can see that they are gonna kind of halt Cybertruck deliveries after panels held together by glue are coming off. We've seen a lot of these videos out there, a lot of Cybertrucks, and I'm serious. They have essentially glued together panels on this truck, and in my opinion, this is not good engineering way of doing this. Another negative point of view headline here: where does Tesla stock face the most sale risk? China, US or Europe? So even you can see even the scope of it, they're framing it in a negative way, because actually the reality currently it is negative. No one is talking about sales record, right? Everyone is talking about how much less they're gonna sell. They're trying to estimate how much the sales is gonna be. Whereas a few years back, 4 or 5 years ago, we were sitting here and talking about Tesla is gonna sell essentially multiple million cars in 2026, 2027 and so on. And we still stuck between 1.7 to 1.8 million over the past 2 years. And with the estimations that I have currently, in fact, let's have a quick look on the estimations. Here you can see the Tesla deliveries in China in January and February combined at 57,465. If we look into more detail specifically on Tesla, we can see here that in USA they sold 43,000 in January, 43,000 in February roughly, and these are probably estimations for March at 41,000. Europe really bad at less than 10,000 in January, a little bit above that in February. But these numbers are again 50, 60, 70% down in different markets in Europe. China also roughly 50% down year to date. Although we can see that the past 3 weeks, we have to be honest, the past 3 weeks in China have been fairly strong for Tesla. In fact, let's have a quick look on the exact numbers there. Here you can see that Tesla's delivery on Chinese market started very weak. In fact, they had the lower deliveries than NIO and Xpeng combined over the first 7 or 8 weeks of the year. But over the past 3 weeks, they're starting to gain some momentum with the new Model Y Juniper deliveries. 12,400 in week 9, 13,800 in week 10, and last week 15,300. But my point of view here is that actually we will see a kind of strong sales for a few weeks ahead. That was actually my idea just a few weeks back. But as the Model Y Juniper hype is gone in, let's say, 4, 5, 6 weeks from now, I still think you're gonna have a difficult time for Tesla, as the general Chinese market is just so competitive. Remember, I'm following here NIO, Xpeng, Li Auto, and BYD. We haven't mentioned Zeekr. We haven't mentioned the other Geely companies, Xiaomi, Huawei. So there's so many cars out there, Ito. So there's absolutely no way that Tesla will go back to the tens of percent of market share in China. Currently, I think they are sitting at around 3 to 4% market share in China. Going to the stock price again, it's not looking good. They just few couple of months ago, they were sitting at below 500 US dollar in stock price, and they're essentially half that. And again, a lot of people think this is a quite great value moment, but it could end up being a value trap. The PE ratio is still around 110. We can see that today it was down around 5% yet again. And going to my estimations now, this is really getting interesting. I remember that a couple of months back, I was expecting around 500,000 deliveries in Q1 of 2025, but that was before Elon Musk started to get really politically active. And sadly, we have to be honest, I'm not taking any side here. I'm just saying that his actions seem to currently not be for the good of Tesla shareholders. Production estimations for me, roughly 330,000. Deliveries, 325,000. Some of the people on Twitter are a little bit less. In fact, a few of them are saying like maybe even 269,000. It's potentially possible. I think that's a little bit too little, but I'm going with roughly around 325, maybe 350,000. Then going to the quarter over quarter change. Here you can see that it's 34% to 35% less than the Q4. That is really bad. We can see that the total revenue should come in at around 18.7 billion, which is again almost 30% down quarter over quarter. This is not good news for a company trading at over 100 PE ratio. And remember that the company was trading essentially at 200 times PE ratio just weeks ago, right? So it was essentially priced for perfection. And since everything that has happened with the political sides of Elon Musk and how people in different parts of the world are reacting to that, it wasn't a good place to be. Going back to the real numbers there, we can see that my estimations there, I still think that the revenue from the solar and the battery energy storage is going to be strong, maybe a potential another all-time high, although we are starting even there to see that revenue is going up fairly okay, but the gross margin is starting to drop off a little bit. Whereas sometime, half a year ago, a lot of people are expecting continuation to high 30s, maybe in 40% gross margin on the energy business. Now we are seeing maybe probably below 30% and most likely 20 to 25% in best case scenario. And going to the gross profit, all of this revenue at 18 billion, 18.7, which is much less than the 25.7 just last quarter, leads to a gross profit going down quite a lot, over roughly $1 billion down. But interestingly, although the gross profit is not taking the worst hit, look at the net income going from roughly 2.3 billion to 1.4 billion. Remember that part of their income in last quarter was roughly $600 billion in price of Bitcoin going up. Tesla currently holds roughly 9,700 Bitcoins, and since the price of Bitcoin essentially doubled in the last 6 months, they took a $600 million profit. But now since Bitcoin since then has gone down quite a bit, 20 to 25% since the all-time high, we should expect a 200 million or so loss in Tesla's Bitcoin position. So everything that went for them in the last quarter is now going against them in this quarter. So looking at all of this, I think the final important number here for me is the GAAP earnings per share, which I estimate to come in at around 34 cents. Comparing to the analyst, I think this is going to be really interesting. Going there to Nasdaq, we can see that analysts expect roughly 56 cents, but I think this is not updated number. I think they are going to be much closer to the lower side of this EPS estimations from the analyst. And once the updates come in, we are probably looking at somewhere in best case scenario 40 cents. But I went currently with 36 cents. It could be a little bit more. But even with all of that said, at 34 or 40 cents, it's not a great place to be. If you annualize that run rate to 4 times, that's what? Let's go with 40 cents, right? A little bit higher than my estimations. That's $1.6 earnings per share for 2025. And even if I am superiorly, like majorly conservative, let's double my estimations of 1.6 currently to 2.8, right? Let's go with the earnings per share of 2.8, which means that after this coming quarter, they would have some kind of regain of sales in Q1, Q2, Q3, and Q4. Maybe we'll see a very strong Q4 at, I don't know, like let's say, yeah, let's hope at 600,000 deliveries. I will still lower this a little bit because these are my old numbers. But in any case, there is no way that Tesla will sell at the apps. If everything goes right now, maybe 1.8 again million cars, right? In best case scenario, 2 million. And that's not a good place to be. And that is on the optimistic side. But if we stick to the earnings per share at 2.8 US dollar per share, what is the current stock price? It's roughly 225. So we are already at the current stage, even way above my own estimations, which are 1.6, maybe let's say 2 US dollar earnings per share. But if you come close to 2.5 to 2.8, we are still almost at 100 PE ratio. And this is for a company that going backwards, right? They are not increasing their sales, at least not as it looks right now. So I think people need to be very careful here. I'm not telling you that this is not possibly the bottom, but I think if this, trend continues with everyone going against Elon Musk, or a lot, not everyone, but a lot of people, especially in Europe, it could be a really, really start of the pain and not the end of the pain. But I think the best thing to do here now is to keep calm, have some a little bit of ice in your stomach. It's down 50%. At least it's not as bad as those who maybe have a hold on. It's difficult, but I think currently let's wait and see a couple more weeks. Like, are we seeing that this kind of negative sentiment towards Tesla due to Elon Musk continues? If that continues, and if that March sales numbers come in Europe still very weak, I think maybe the damage might be quite much more long term than we would have expected, and it should not be great for Tesla in long term. But I think, yeah, it's risky. I think there's better options out there. Again, AMD. I think it's much more like, even AMD is down 50%, but you would expect AMD stock to recover at least 250 to 200 US dollar due to sales estimates. So I think it's a better risk reward ratio there. So that's gonna do it for today. Please like, subscribe, and comment in the comment section. Do you think that the sentiment damage that has been done in the past 2 or 3 months is maybe not permanent but very long term, or do you think that it's gonna be swift away in like a couple of weeks or even a couple of months? Thank you for your time, and see you in the next one.